Welcome back to Market Wealth India. The moment we have all been waiting for is finally here. Today, we're diving into this explainer to unpack the Jio Platforms IPO for 2026, and we are trying to answer one massive question. Is this going to be the biggest issue of the year? Jio Platforms, which is basically the digital powerhouse of Reliance Industries, has officially filed its draft red herring prospectus, the DRHP, with the market regulator, SEBI. So we're going to tear down these draft documents to figure out exactly what this means for the telecom space, and more importantly, how you should be looking at it. Look, everyone from your everyday retail investor right up to the heavy hitters on Wall Street is asking the exact same thing right now. Is the digital arm of Reliance Industries about to literally make stock market history with this offering? With market reports projecting a capital raise of roughly $3 billion, we're not just talking about a standard IPO here. This is an absolute financial mammoth, and it demands our attention. Here's how we're going to break it all down today. We'll start with the mega IPO announcement itself, then look at the mechanics and fund usage, decode the financials, compare valuations with their peers, and finally wrap up with our outlook. All right, let's jump right into part one, the mega IPO announcement. Okay, so according to the draft papers they just handed over to SEBI, alongside the NSE and BSE, the company is getting ready to issue a staggering 27 crore fresh equity shares. That's 270 million shares, folks, with a face value of 10 rupees each. Honestly, just the sheer volume of shares being floated here tells you everything you need to know about the immense scale Reliance is targeting for this public market debut. Now, while the official issue price and the price band haven't been locked in just yet, the buzz on the street is absolutely deafening. Market reports are consistently projecting that this IPO could pull in approximately $3 billion. If that valuation holds up when they actually list, it's basically a lock to become one of the largest, most historic public issues in India's entire financial history. And you know, the strategy behind this whole listing is super intentional. Reliance Chairman Mukesh Ambani made it a point to say that this listing is designed to unlock some serious value for existing Reliance stakeholders. But just as importantly, it finally opens the doors for the broader public, meaning us, to jump in and actively trade in the company's growth journey. Moving right along to Section 2, Mechanics and Fund Usage. Now, this is probably the most interesting part of the whole structure, mostly because of what is missing. A huge detail in the DRHP is that this IPO is a 100% fresh issue. There is absolutely zero offer for sale, or OFS, none. What that means is the current promoters and shareholders, they aren't cashing out a single rupee. Every single bit of that capital goes straight back into the company, which is a massive vote of confidence, if you ask me. And speaking of the folks holding those shares right now, this pre-IPO cap table is just a powerhouse. Reliance Industries obviously dominates the board with a 66.43% stake. But then you've got global giants backing them up. Meta, through Jio Holdings, holds nearly 10%. Google is sitting there at 7.73%. And Saudi Arabia's sovereign wealth fund, PIFE, holds over 2%. That is a seriously formidable lineup of investors refusing to let go of their shares. So, if no one is cashing out, where exactly does that anticipated $3 billion check go? Well, they have spelled it out. First up, a huge chunk is going aggressively toward the repayment or prepayment of outstanding debt taken on by its subsidiary, Reliance Jio Infocom. By wiping out that debt, they're going to drastically clean up their balance sheet. Whatever is left over will be funneled right into general corporate purposes to fuel their working capital. And to actually orchestrate an IPO of this colossal size, Jio Platforms couldn't just hire one or two banks. No, they brought in a literal army of 19 top-tier investment banks. We're talking the Avengers of the financial world here. Heavyweights like Morgan Stanley, Kotak Mahindra Capital, BofA Securities, and Goldman Sachs. It takes a massive syndicate to manage an issue of this scale. Okay, let's get into the numbers. Section 3, Decoding the Financials. The revenue trajectory for Jio Platforms is honestly just a straight line up and to the right. It's incredibly consistent. They climbed from over 1.1 lakh crore rupees back in fiscal 2024 up to 1.29 lakh crore in 25 and hit nearly 1.5 lakh crore in fiscal 2026. This top-line growth is being driven by a massive user base of over 524 million customers, plus they're steadily increasing their average revenue per user. But you know, it's not just top-line vanity metrics. They're actually translating that revenue directly to the bottom line. Their profit after tax has scaled beautifully right alongside it. Profits grew from over 21,000 crore in FY24, crossing the 30,000 crore mark by fiscal 2026. That right there is what a highly profitable, highly scalable digital infrastructure business looks like. Getting a bit into the weeds for fiscal 2026, here are the numbers the analysts are obsessing over right now. We're looking at a very solid basic earnings per share, or EPS, of 33.63 rupees. Their return on net worth is sitting at 9.42%, and the net asset value per share has climbed to just over 373 rupees. These are the fundamental building blocks institutional investors are going to use to figure out if the final asking price makes sense. Which brings us perfectly to Section 4, Valuations and Peer Comparison. Because numbers in a vacuum don't mean much, right? We have to map out exactly where Jio stands in the competitive landscape against the heavyweights already trading out there, specifically Bharti Airtel and Vodafone Idea. This is crucial because it gives the market a real-world benchmark for how to price Jio platforms once that final price band is revealed. And when you actually put the industry leaders side by side, a super interesting dynamic pops up. Look, Jio's profit growth and that zero OFS structure are undeniable strengths, but Bharti Airtel currently edges them out on return on net worth, boasting 20.32% compared to Jio's 9.42%. Airtel also reports a higher overall income at over 2.1 lakh crore. It's a great reality check. It shows us that while Jio is an absolute growth engine, there is robust, highly profitable competition already dominating the market. All right, let's wrap this whole thing up with Section 5. Final thoughts and outlook. So we've got the mechanics down. We know the money is paying off debt, and we've seen the aggressive financial scale. But the ultimate success of this listing really hinges entirely on one missing piece of the puzzle: the upcoming announcement of the official price band, the PE ratio, and the final valuation. Until those numbers drop, the entire market is essentially in a holding pattern, just waiting to see exactly what kind of premium Reliance is going to place on its digital crown jewel. So knowing all of this, the sheer scale, the strategic backing of giants like Google and Meta, a zero offer for sale, and that compounding financial growth, I've got to leave you with one massive question. Are you going to be applying for a piece of the Jio Platforms IPO? Dive into the prospectus yourself, weigh these financials against the peers, and decide if this is the generational wealth opportunity everyone expects it to be. Let me know what you think in the comments. Thanks for joining me on this explainer, and I'll see you next time.